Good afternoon and welcome to this latest MGAA Conversations podcast around the increasingly important topic of counterparty risks. I'm delighted to welcome our panel, drawn from our MGA sector, who will provide valuable insight in the current risk and how to identify and manage them. So, without further ado, let me introduce you to the panel. And if I could come to you first, Sonia.
Hello, nice to meet you. So I am Head of Compliance for Pro MGA Solutions, working in the insurance industry now for 24 years. Started off in customer service, underwriting, and that led me into compliance role within an MGA company.
Thank you. Welcome. And Nathan?
Hi, good afternoon, Mike. So Nathan Banfield, I'm Head of Customer Success here at Reg Technologies. So we're a software provider to the insurance market and one of the MGAA supplier members. And I've been with the business for nearly 9 years now. So a fair portion of the time that we've been doing this. So yeah, looking forward to chatting today.
Excellent. Welcome to you. And Richard?
Hello, Mike. Thank you very much for the invitation. So my name is Richard. I'm CEO at Antares Insurance, part of the Antares Global Group of companies, and we just entered our third year of trading.
Thank you. So welcome to our panel. Obviously drawn from different parts of the sector, as I've said. We'll all have their own insight in terms of, sort of counterparty risk. So, let's get straight into the discussion. So if I could come to you first, Sonia, and sort of if we look at sort of rethinking counterparty risks, on a scale of 1 to 10 or however A to Z or however you like to do it, how would you rate the health of our sector, in terms of managing counterparty risk currently?
I think currently we've got a great head of the game within the industry. The MGA model is maturing very quickly, and I don't really see it under threat. I see it more of an opportunity within the industry to strive. MGAs are operating well with increasingly complex third-party networks, and I believe the challenge is ensuring that right continual risk management is in place, and a key aspect of that is just ensuring that we are maintaining visibility, oversight and accountability as those risks evolve within the industry.
And Richard, through a capital lens, so you deploy capital, you pay the claims. So again, and you get the first knock on the door from the regulator as well, which we'll come on to later. So through those particular areas, what's your sense in terms of the health of the sector around sort of managing sort of counterparty risks?
So firstly, I'd say counterparty risk is inherent in the delegated model. Okay. There are significant regulatory expectations as an insurer, both from the PRA and the FCA, around counterparty risk in all its forms. I'd say the UK MGA market, Sonia mentioned, it is healthy, it's large, it's growing, it's embedded, certainly in the commercial and retail underwriting sectors within the UK. I think we should recognise that not all of the MGAs are the same in terms of their size, their resourcing, their capabilities. So we must accept some are more mature in their capabilities than others. But overall, I would assess the market's capability as good awareness. I think we've got good systems and processes, good frameworks, and good tools to support us. As ever, it's a dynamic market. Change is a constant for us, so we're always striving for improvement.
Okay, that's interesting. So that's 2 out of 3 in terms of a thumbs up, I suppose, Nathan, in terms of the health. So again through sort of Reg Technology, in terms of dealing with sort of wide name of MGA clients, what's your sense around the health?
Yeah, so I'm going to toe the party line here and agree with other panelists. From my perspective, MGAs make up the largest proportion of any customers that we have at Reg. If you look at the market participants, MGAs are the most common ones to utilize our platform in terms, which we provide due diligence data on Counterparty, so this is right in our wheelhouse. So from that perspective, I think that their ability to be agile, to pick up new tech solutions and implement them potentially more quickly than some other market participants probably lends them to in their favor in that particular area. But Richard's right in the fact that the requirements are constantly changing. So what looks good today, it might not always remain that way. So like it's keeping an eye on the future and ensuring that you're sort of future proofing those solutions, I guess.
Okay, so that thanks for that, and I think that's quite an interesting and very encouraging for our listeners. Healthy score in terms of both, as Sonia referenced, the sector growing, the actual expectation and understanding around managing sort of counterparty risk, and again, this covers all sorts of areas such as anti-money laundering and outsourcing, whatever, which we'll come on to. So one of the areas I'd like to come to first, and maybe I could come to you, Richard, on this first, is that our market is becoming more complex. We know that with digitalization and technology, which we'll also touch on. But for me, a lot of the time, where this counterparty risk identification is around onboarding new arrangements, obviously, which all your stakeholders on the panel would have had experience of. So Richard, perhaps through a carrier lens, can you give just a sense of your expectation from when you're deploying capital to an MGA in terms of what you would be expecting to see, how they would demonstrate and evidence, that management of sort of counterparty risk?
So everything that starts with us is essentially with the onboarding process. So if I maybe just talk a little bit about how we undertake the stages for the onboarding, because during that onboarding process, that's really where there's lots of touch points for evaluation and assessment of counterparty risk. So at Antares, essentially, step number one is the initial triaging of the opportunity. Comes through the door, however it may come, and then we make a very quick initial assessment in terms of does it fit our appetite, class of business, are we already in that sector, is it would it compete with our existing partnerships, etc. Once we're happy with that, then we go into our sort of second phase, which really then is a more comprehensive assessment in terms of the underwriting capabilities, the performance of the MGA. Operationally, the form of the opportunity, lead market, a co-insurance market, the maturity of the business, etc. If we're happy with that, and the MGA prospectively is happy to work with us, then we undertake what we term a discovery process, where we utilize an independent third party to go and visit the prospective new partner, and very quickly make an assessment of their core capabilities, operationally, underwriting, infrastructures, systems, processes, distribution methodologies, etc. We're happy with that, no red flags. Then we essentially, that's our sort of go, no go. Then we'd undertake what I think everybody around here would recognize as the full due diligence process. That's a big resource commitment, lots of people engaged, lots of different stakeholders, both from ourselves as the carrier, but also for the MGA. And that really is a comprehensive review of the operation as we assess it as fit for purpose. And that covers a myriad of different things. Essentially, as you appreciate with the MGA model, inherently, if we enter into a delegated underwriting authority contract, then we are hand in glove with our agency partner. So that's really important. During that process, then we undertake the negotiations for the binding authority, and if necessary, the delegated claims handling authority. And that really is important for us in terms of setting out the parameters, the expectations, the roles, the responsibilities, etc. But it's also an opportunity to identify where we think there are some gaps, or there are some necessary actions to improve. Then that's fine. Then we sit down and we look at what is required in terms of the improvement. We make sure that we've got accountable people, we've got timelines, we've got checks and measures, etc. Conclude the whole process, the MGA becomes operational, then it's systems and processes really around operational oversight and monitoring. So it's complex, but it's super important that not only we, but also the MGA partner also understands where those risks lie, for the counterparty risks, both for ourselves, but also for them within their own business and their own third-party counterparty risks.
Yeah, thanks for that. I think that's a very typical playbook of onboarding from a carrier bit. So I appreciate sort of walking through that. I want to pivot back on one element in a second, but Nathan, in terms of the MGA clients you sort of work with, and from that bit, and again, we will be touching on technology as we go forward. When you're part of that overall onboarding process in terms of what you do, what's your experience in terms of where things maybe pop out in terms of, which either the MGA or whatever hasn't identified, or the carrier has sort of pressed the button and said, well, oh dear, we've got a gap here.
Yeah, I think that onboarding stage, if you like, is still sort of a key control area for your sort of third party risk management, right? It allows you to lay the groundwork, the sort of set expectations between yourself and, from an MGA perspective, and their, and their producing brokers, etc. So I think, the firms that I work with, and I see them doing it well, is they've really made a conscious effort to sort of move away from, fragmented processes in emails and sort of leaving things in people's inboxes and things, and move into sort of a, a more digitized, like end-to-end workflow. So it's both more efficient, but also, improves the coverage of the checks that are being done. So, I know, we're all very much used to receiving due diligence requests and questionnaires and such like. And I think one of the things that I've noticed from our perspective is, and we've all done this, is when you receive one of those, how many of those answers you get to those questionnaires and such are sort of stock standard. The sender already knows those answers, and so it's kind of it's not a good use of your time or the MGA's time in this instance. So if you have something like a solution that provides live data, Reg is one of those, then you can cut down those requests, and you can cut down the potential of errors and omissions by sort of digitizing and automating many of those sort of requests. And I think that's a key thing. If you can, we all receive many versions of these, forms, questionnaires, requests, etc. If you can cut them down from 30 questions to 15 questions, you're much more likely to get them back and be able to get your business started much quicker, which of course, time is money, right? And also you'll have a happier and initial relationship because there's just less of the admin, right?
Yeah, no, that makes sense. So Richard, if I could just come back to you before I go to Sonia, just on one of your points. Obviously very comprehensive. I was quite interested that as an insurer you use a third party to do that due diligence. And I'd be quite interested, and sure our listeners would be, how that works, because obviously the MGA is partnering with you as the capital. Does that third party have a continuing relationship with that MGA on your behalf? It's just that you drop in a SWAT team, do you? Is that effectively what you do?
Kind of. It really gives us the assurance of an objective view very early on of the, as I say, the operational, the management, the infrastructure capabilities of the MGA. So it's something that we find quite useful, because it's very easy for underwriters to invest quite a lot of time and emotion into the opportunity of building a new relationship. And sometimes there's I wouldn't say an inherent bias, but there's an opportunity to perhaps paper over gaps or issues that
careful
that may otherwise not necessarily come to the fore. So for us, it's an assurance process whereby we've got an independent view of the prospective new partnership.
And again, I know I'll come to Sonia in a minute. I want to sort of not labour this point, but just pivot back again. So that independent review, is that then reviewed by your own internal compliance oversight governance people, or so you are basically checking their homework as well before you deploy
Yeah,
that
yeah, yeah.
data?
I
Okay,
mean,
so it's a
there's
real
there's
belt and
no one
braces job
decision
then,
maker.
real belt and braces then, effectively.
Yeah, yeah. I mean, we said, it takes a small village, right, to successfully operate a delegated authority. So for us, a lot of people would have a look at those reports, both from the underwriting, the
Yeah.
senior management, potentially going through into underwriting committees, etc. So as I say, for us, it works very well. It's inherent and embedded in our process.
Okay. And Sonia, coming to you, so Richard and Nathan were discussing around how important, and the fact that the onboarding process is the real window where that you can sort of manage counterparty risk, and you can identify sort of third party outsourcing and make sure everyone's fit for purpose. So ProGlobal will sort of operate with a number of MGAs, obviously. So you would see it from your lens, both through a capital in terms of what capital are requesting, as well as support with the MGAs you work with. So what's your sense around the onboarding process, and does it work? Is it a little bit sort of disjointed, or does each insurer want something different? Is
It's
what's your
extremely
sense?
important, the onboarding process, but it needs to be maintained going forward. So it needs to be continuous as well. So what you might not discover on the onboarding phase, you might discover later on. So it's all about making sure that you've got that risk management in place, and then the responsibilities are outlined and people are accountable. So during the onboarding phase, we go through a robust process. We make sure we use the technology available to us that we can utilize, but also a lot of it is human, perception, and just making sure that we're getting the context right. So I think it's really important to make sure that when you're doing the due diligence piece, you got the context correct and you obtain as much information as possible to be able to determine, if it's a risk that you want to take on or not, if it's in your portfolio of those like basis of our due diligence process is around conduct risks, especially. So it's just looking at those different elements and then making sure you come to the right conclusion.
And if I can come back to you again, so because I think this is of great interest to our listeners. So the onboarding process can be, can be heavy lifting, and Richard has articulated it, and sometimes there's always a sort of bit of an excitement around to get binding business quickly, because that's the important part. But in terms of your comment around, it has to continue during the relationship. One of the frustrations for MGAs in particular, and you'll know this, is that they like to set out, data requirements, tracking, measurement right at the start, and hopefully then they can have that data set and whatever deliverable during while they concentrate on underwriting. And there is a frustration in terms of, and I don't want to pick on carriers here, but there is a frustration at times where there's a constant request for other data, more data, etc. Again, probably perfectly reasonable, but actually your MGAs will say, well, look, why wasn't this established on the onboarding stage? Because we'd really rather want to get on with doing the underwriting and serving the customer. Do you recognise that sort of frustration from the MGA?
Yeah, I think after onboarding, monitoring is critical. It needs to be maintained accordingly to pick up on any potential risks, but also mitigating any risks that might come into play. So just making sure that those people are accountable, but also that they're aware of when they need to report things. So, for instance, we have a risk incident process whereby it's important that the client attests to understanding that risk attestation process, which will allow us to have immediate notification if there was a potential risk that might come to light. So just being there at the outset to guide the client as well, and coming to the right decision on the action to be taken for a particular risk that might arise is key, just to having that control in place. So the oversight and the monitoring is really important after the onboarding phase.
And Richard, do you recognise that frustration at times from MGAs in terms of the constant sort of, we agreed this and now you're asking for X, Y, and Z, and what actually you're going to do with the data, because that with the best will in the world, sometimes it does, the requests to tend to derive, or the genesis of them comes from carriers, doesn't it?
Yeah, I mean, experience for us is to get it right early doors. So we have quite robust and extensive data requirements because we operate in the retail space. So for us, we spend a lot of time, which forms part of our due diligence process. So we have our template data requirements, risk bordereaux, premiums, claims, complaints, other pieces, etc. So we try and set our store out very early, sit down with the prospective new partner and walk our way through in terms of our requirements, our expectations. There may well be gaps. They may do things slightly differently in terms of the format of the data, the regularity of that data, etc. So that's something obviously we'd work with them. But at the end of the day, when you're dealing with, underwriting performance and particularly aspects of consumer duty, you have to have very detailed, very granular data access in which to analyze and measure.
Okay, I want to come back to, maybe if I can, a little bit later on the theme around what the three of you feel is sort of the flashing red sort of counterparty sort of risk. But I'd like to, because we've touched on that, I'd like to move to technology now, and if I can come to you, sort of Nathan, and you've shared a little bit with our listeners around what technology can do. So if we could start with you, how do you look at the market and see how well technology / AI tools are being used, not to clearly mitigate counterparty risk, but actually, as well as that, increasing operational efficiency for stakeholders to sort of, really focus on the areas which they want to do, which is delivering great customer outcomes. What's your sense?
Yeah, I think the only way that that you can get to those positions is through implementation of some sort of one or many tech solutions, right? First and foremost, you can only mitigate risk effectively if you've identified it, and given the volumes of third-party relationships and the information that we require. Richard mentioned consumer duty and things like fair value assessments and such, right? There's huge volume of information required there. To effectively collect and assess that kind of information it's not possible with just just individuals. Now, you touched on AI, and I think that that particular kind of task of data analysis with vast volumes of data is exactly what that can help the MGAs and others sort of achieve in record time, right? In things that weren't able to do before, we're absolutely able to do now, and I think those kind of tools are very effective at picking out the outliers, if you like, of like what sticks out and where the issues might arise and what needs human intelligence to go and look and dig in and speak to people and achieve the outcomes, like you say, that are important for the MGAs, but also for the customers at the end of the day. The other thing I think that's important is having a combination of different data sources. Everyone's got data in lots of different places, it's disparate. Having them collated and accessible, and then also being able to make real decisions off the back of it is kind of the holy grail, if you like, right? Everyone I think probably on this call can recognize we've got multiple systems that do lots of great things, but having a single source of the truth, and being able to actually make actionable decisions off the back of it is where softwares can really change outcomes, from my perspective.
And do you see, Nathan, is the industry sector all going at the same speed? Because one of the things I hear is that the capability for organizations within the ecosystem who aren't quite ready to either ingest data or export it. And so, the sense I get is people were not all quite all together at the starting block. Is that something you see?
Yeah, I can definitely attest to that. Lots of different businesses, while at the end doing the same thing, have got different ways of getting there, and the ability to pivot and adjust and take on these kind of projects, it will depend. I speak to customers that have internally large development resources where they can pull like the data we provide and pull it into other systems very, very easily, and others, it's at the minute just a pipe dream, if you like. It would be brilliant if it was achievable, but it's not there. So there's certainly a variation. I guess my vision is skewed because I talk to our customers and they've already taken the leap of using a software to draw in the data on their counterparty. So I guess they're already one step further up the ladder than many may be, right?
And Sonia, what's your experience about the good use, or alternatively the not so good use, of technology in terms of increasing operational sort of efficiency and identifying and
I
mitigating
think
risk?
you need to be careful because technology brings its own risks as well. It's important still to have that element of human judgment. I think it remains essential, to making sure that you're not just reliant on that technology. You've also got human judgment still there.
Yeah, that's a good point. Very good point. And Richard, from a carrier perspective, where do you see yourselves on that journey in terms of export ingestion of data, which Nathan alluded to?
So we're in the risk business. Risk is all about understanding, and understanding comes from information, and a large part of that information essentially is data. So when we launched, we made a significant investment into the technology that allows us to process the data coming into our organization, to check it, to validate it, and then to build some analytical tools that sits across our database, to allow us to essentially track and monitor and evaluate. So when we touched on this earlier in terms of the data requirements, so we're in a position now where we're able to bring together our policy exposure data, our premium data, our claims data, and our complaint data. As Nathan mentioned earlier, we're able to collate all of that information at individual policy level and at product level. So when it comes to our traditional analytical tools and KPIs around underwriting performance, that's fine. But more importantly, when we're looking at the 4 consumer duty outcomes, we've got significant depth of insight, particularly with the complaints piece, to be able to bring that back into our policies associated with our claims and the performances and the cost of distribution, as I say, at policy and product level. So that's really essential for our business.
That's excellent. Well, that's excellent. It's very forensic, actually. I imagine, to credit you, you're probably slightly ahead of the curve as some of your sort of peers in terms of being able to do that, because the creation of dashboards which you can actually pull out of that data in terms of being that advanced, obviously, is always adds to that sort of that oversight and sort of governance. Okay, if I could just sort of pivot back, actually, and when we look at sort of counterparty risk, and I'll probably ask each of you this question: if there was one element in terms of outsourcing, anti-money laundering, the whole sort of spectrum of risk, which we've covered so far, certainly around the onboarding thing. If there was one, I'll try and frame it, which would keep you up at night in terms of where the sector perhaps needs to keep a greater view on. Like, probably unfairly. Let me ask you, Sonia, first. What would be the one which you would say never ever stop sort of reviewing and monitoring in terms of that whole risk
I think
element?
overall it'd be conduct risk because there's so many elements to it as well, especially with the FCA's focus on consumer duty. It's really important that you're looking at the different parties within the chain, but also that they are aware of their responsibilities within that chain, and ultimately that the customer is getting the best outcome. So I think everyone needs to be, aligned and to ensure that actually happens.
Richard, you're nodding there on that one.
Well, I was going to say in the retail space, everything keeps me awake at night. But I think Sonia's right. I mean, it's the financial risk, the underwriting risk is we as an industry have been doing that for hundreds of years, right? The regulatory risk, the consumer duty, the operational resilience, etc. These are so important, and they're very difficult to get right. We work extremely hard, as I mentioned earlier, around our evaluations and assessments. But the world is constantly changing, and we're always running to make sure that we're keeping up.
Nathan, is that going to be a hat trick in terms of what's your sense from your customers?
Yeah, absolutely. I think that the challenge, like Sonia said, is having oversight of that full distribution chain all the way down to the end consumer, because realistically, as a carrier or an MGA, that the responsibility for them lies on on you and on the carriers at the end of the day. Richard's seat over there, but just being able to see where how the products are distributed, being able to assess if they're being distributed fairly and in the right manners, it's a massive challenge, and that's, we have a tool that allows our customers to move in that direction, by allowing for sort of requests to be passed along a chain almost, if that makes sense, that distribution chain. So that is certainly one of them. I guess another one that springs to mind when I when you ask that is cross-border arrangements as well. Different regulatory requirements, maybe with yourself and those that you're delegating responsibility to, or you have an arrangement with. So that's one as well that I think as our customers I can see they're dealing with providers, suppliers, delegated relationships in all over the world. It's one where does the regulatory requirements of the person you're dealing with match, meet, or exceed those that we have here in the UK from the FCA and the PRA?
I suppose on that, Nathan, that's where, as you alluded to earlier, that's where technology can be a real win on that, can't it, in terms of that cross-border. But I think from all three of you, that messaging is great for our listeners around sort of conduct risk, because it is something actually which can quickly fall away, can't it? The longer the chain, etc., it can get further and further away. And I think, picking up on Sonia's earlier point about something you have to keep working on, I think the conduct risk is not something you think you can just, well, we've done it now, let's move on to something else. It's sort of something you've got to keep monitoring and evolving. So I think that's a very, very good advice from all three of you, which leads me into, actually, picking up on Nathan's point, regulation. We can't have a podcast without speaking about regulation and our friends at the regulator and the PRA. So obviously recently, and obviously we've done a lot of work with the regulator, certainly around their regulatory priorities report, which I've no doubt all of you have seen. Within that there was commentary around delegated claims, which obviously is all part of counterparty risk in terms of how that's dealt with. And currently looks like the regulator is going to concentrate as an extension of the which super complaint, so it will be likely to be in the retail space in terms of home and travel. So that's obviously an area which you've all touched on, that claims outsourcing and how important that is, certainly from an end customer perspective. Is there any other areas, if I'll come to you again, Richard, if I may, is there any other areas you see or predict that the regulator may look at, from a again, on a counterparty risk basis, where not necessarily they're unhappy, but they're quite right to sort of give something a bit of a poke and say, look, is it operating as it should do? And putting claims aside, which I don't think surprises any of us on this particular discussion. Any other particular areas?
Difficult to predict. I think that the likelihood is that we're going to see more focus around, as Nathan touched on earlier, AI within our business, within our pricing, our decision making, etc. Something that we're looking at internally at the moment, because there's lots of tools out there which is fantastic to help and support. I suppose the question is the understanding of the the models themselves in terms of the outputs, how we justify their use, how we can ensure that we have an understanding of any biases, the checks, the balances, the ethics around these things. So all of these things, I think we need to take a little bit of a step back and just think to ourselves, right, what is right, right? What is ethical? How does this work within our business? And more importantly, for our customers, our consumer policy holders, can we justify?
And Sonia, you know, any crystal ball or anything like in terms of what the regulator might look at?
I'm thinking, following the policy statement recently on operational incident and third-party reporting, that there most likely be more emphasis on clearly defining roles and responsibilities of various parties over product development, especially, and product delivery and customer outcomes. I think, and defining those roles and responsibilities need to be on the agenda as such to fit and line up with those new third-party reporting requirements.
Yeah, I think that's a very good point. Actually, I think that's something when we were talking with the regulator recently. Lisa was saying around accountability and who's responsible for that, and I think they're moving to that sort of, you know, can we have that in writing? Can it be written down? You know, data-led sort of type thing. So I think you're absolutely right. That I think is something, again, our listeners need to, you know, pick it up on that point, need to be aware of, because I can see that happening. Nathan, what about yourself?
Yeah, I think not that it hasn't been a pretty key focus recently, but in terms of monitoring and keeping control of third parties, like cyber resiliency, you know, in terms of that element, it's, you know, not just, hey, do you have a cyber, you know, do you have cyber cover, but let's dig into this, you know, what specific actions and mitigating, you know, work are you doing as my counterparty to ensure that you are protecting, you know, at the end of the day, customer, consumer data, our own interests, etc. I think that's one that's going to keep cropping up, and as unfortunately the number of attacks and things, and we see them in the press all the time, unfortunately, don't we, as they continue to ramp up the requirements to make sure that everyone across the distribution chain is doing as much as they can to protect the consumer at the end of the day. So that one, I think, is going to be high up on the list fairly soon.
Yeah. Well, you know, thanks to the three of you for that, because three very good examples and insight in terms of what's likely to be coming down the track, and opportunity for our listeners to get ahead of the curve on all those areas. So look, we're coming to a close. So I think I'd like to give you all the opportunity for our listeners in terms of, you know, if you have one or two key messages you'd like to share in terms of ensuring that, you know, the MGA sector, you know, and MGAA members, which you're all members, you know, continue to sort of successfully manage counterparty risk, you know, both now and going forward in a exciting but increasingly complex market. So Sonia, let me come to you. What pearl of wisdom would you like to share with our listeners?
I would just echo again about monitoring. Monitoring provides confidence, and it also enables, you know, risk management, effective risk management. So having that monitoring in place that's effective, but also ensuring that as your relationships evolve with your counterparties, making sure that your evidence is up to date and you've got that you know, data, and you're using it effectively just to mitigate any potential risks.
Fantastic. And Richard?
So think hard about the identification of the counterparty risk, how you measure it, how you mitigate it, and as Sonia said, how you monitor. Then I'd also kind of, as an adjunct, maybe then take the next step and think about stress testing and scenario testing.
Excellent. And Nathan?
Yeah, I guess from the customers I speak to, you can tell those that have sort of best in class approaches to this type of thing, they treat it as, you know, strategic initiative rather than sort of a tick box exercise or a sort of a back office task. So I guess it's down to leadership, if you like, and those in those roles to drive this. And then really, yeah, Sonia's right. It's monitoring, right? It's the ongoing monitoring. It's, you know, making sure there's clear ownership and escalation for when things do inevitably, unfortunately, don't, you know, the outcomes aren't exactly what you like. And then that in itself gives confidence, and hopefully with confidence, business can thrive for MGAs and everyone in the sector.
Okay, thank you. Okay, so look, you know, first of all, let me thank you, Sonia, Richard, and Nathan, for fantastic insights for our sort of both MGA members and people who listen to this sort of podcast. Some very, very key messages, some real good key advice, which I'm sure they'll take. And just takes me to sort of close the podcast and thank you again for your contributions. Thank you very much.
Thank you.
Thanks.
Thank you, everybody.
Thank you very much for listening. The MGAA welcomes all feedback on all our episodes, so please get in touch. Please get in touch with any suggestions on topics or new guests. And don't forget to subscribe on your chosen platform so you don't miss out on any of our future exciting episodes.